Hey everybody, Boris. Welcome to the crosses section for January 9th to January 13th of 2017. And on the crosses side, there's actually quite interesting several setups that I wanted to share with you that actually jumped out at me with much greater strength and surprise than I thought there was on the majors. Let me just get right to them because I think they're really quite interesting. The most interesting setup that's popping up on the charts is the whole relative strength, relative weakness trade in the COM dollars. The idea that I talked to you about earlier in the session of CAD being much stronger than Kiwi, there is very clear opportunity here for a move all the way down to 91s in Kiwi CAD. Kiwi CAD is in a clear downtrend, but the last day trade, especially off of very good Canadian data, suggests that we have more downside scope here to test the supports at 91. Of all the charts I looked at this week, this one seemed like the clearest definitive signal, and the Kiwi CAD to the downside certainly looks quite good with a resistance at the 94s. A more unconventional trade, and one that sort of could be interesting, is if you want to trade the dollar story to the upside in a very quirky fashion, you could consider the idea of pound yen to the long side. When you look at the pound yen chart, you'll see quite significant consolidation and a bottoming out here, which suggests that if the yen trade really starts to take off, the idea here is that if the yen trade starts to take off, the cable is really going to find support at 22. It's going to show some relative strength here, and you could see a nice big pop. That is, the decline in one is not going to offset the rise in the other. It's just an interesting way of maybe considering the long dollar trade without too much downside price action. Because if the yen does come down, the uptake in pound could potentially offset some of that losses to the downside. The third relative strength trade is less clear at this point than the Kiwi CAD trade, but still looks relatively good on the charts, which is the Aussie Kiwi. It's a much slower, much more tedious, could take maybe weeks for us to move 100 pips in this particular trade, but it's very clear definitive support at 103.50 and potentially move all the way to 105.50 as we go. Let's take a look at the charts here and I'll show you exactly what I mean. So first and foremost, looking at Kiwi CAD, this is what really popped into my eyes. First, we see a very, very clear downtrend, a series of lower highs, and a sharp, declining downtrend here. So if you trade the analogs, which is the sharp, big move up and a sharp decline over a day, a penny move to the downside a day, which is exactly what we had here, a penny move to the downside a day. Over the next week, we have further continuation drift to the downside. Now, the only caution, of course, is 91 is a long-term support here. But this further continuation down to the downside, the test possibly towards the 91 level, seems quite possible, especially if we get even a modicum of support in the oil prices. If oil prices just sort of hang tight and either stay flat or rise a little bit, the relative strength in the Canadian dollar, just sort of this North America versus Asia trade that I talked about, becomes very clear here. From a technical point of view, it's a pretty clear trade up. Only a move above 94 completely invalidates the setup. A move above 93 certainly suggests that that it's a nasty little retrace. But as a momentum trade, there seems to be quite a lot of decent potential momentum to the downside here, and I like this to the downside as one of the better looks this week in what is essentially a very, very fallow selection process. So here's the idea of the long dollar trade via pound yen. As you can see, the double bottom here, relatively decent double bottom, and a corrective phase that really catches itself well above the 140 level. So 142 breaks to the downside, this trade gets busted completely. But if there is any scope for further yen appreciation, then certainly the move up here, all the way up to 145, is quite possible. So I like the risk reward. I like the tightness of the trade here, and it's a sort of an unusual way of trying to consider what is a conventional idea so far. And then last, and in this case, certainly definitely least because it's just very, very slow trade, is the Aussie Kiwi. Again, the trade here is relative strength to the Australian dollar, or the weakness of the Kiwi dollar. The 105, big resist, but if we break 105, we can very quickly pop towards the 105.50, which is a bigger overlay, a bigger resist point here. Made a very nice bottom here, recovery on Friday to the highs, also suggestive of further impulse to the upside. Again, 105 going to become very, very critical. So we'll see how Monday night Asia trades as far as taking us a little bit further. But I like this trade. We have a series now of higher lows here. All of this suggests that near-term upside action definitely preserved, and the impulse higher remains in place. So those are the ideas that I have. As I said, I like the Kiwi trade, Kiwi CAD trade to the downside the most, for both fundamental and technical reasons. And that very well could be the better trades this week, as the majors are probably going to be very, very quirky and very choppy. Wish you guys the best of luck, the best of trading. Boris, over and out.